This is Alan Olsen with Crazy Tax Deductions, where we talk about the deductions that people put on the return and actually got away with it. Did you hear about the gas station that was giving away free beer to its customers? Well, as it came time to file the tax return, the gas station owner took all the beer expense and put it on the return and told the IRS that it should be allowed as a tax deduction because it was used for the promotion of business. The IRS agreed. And did you hear about the individual that bought a private plane to look at the rental property? You see, a normal drive to this particular rental property in the mountains was about 5 to 7 hours, and this individual did not have the time to make that long, treacherous drive up the mountain pass. So instead, they bought a plane and told the IRS that the cost of the plane should be considered as a deduction because it saved them so much time. The IRS listened to this argument and they told the individual taxpayer that we agree. The amount should be allowed as a deduction as a normal, ordinary, and necessary business expense. And did you hear about the couple that bought the cat food and wrote it off on their return? You see, this individual couple owned a junkyard and they needed to attract feral cats to run around and catch all the rats and snakes in their junkyard. They successfully argued before the IRS that the cat food should be considered an ordinary and necessary expense since it took care of all those rodents on their property. And did you hear about the individual that put a pool in his backyard? You see, this individual had a medical condition that he needed to go swimming every day. Doctor's orders. The individual, when it came tax time, took the cost of the swimming pool installation and put it on his tax return, stating it was a necessary and ordinary medical expense, done only at the doctor's request. The IRS looked at the return and allowed the deduction. There was a man who was annoyed at his neighbors, so what did he do? He bought his mobile home and donated it to a local women's shelter. When it came tax time, the individual wrote the cost of the shelter off as a charitable contribution. IRS looked at the deduction and agreed with him. And did you hear about the owners of a dairy business that went on an African safari? Well, these individuals took their African safari in an effort to research wild dairy cows. They told the IRS at tax time that it was an ordinary and necessary business expense in an effort to try and improve the quality of their dairy products. The IRS looked at the deduction and guess what? They allowed it. Looks like these individuals really know how to milk the system.
Learn more at GrowCo.com.